Hello and welcome to BQ Prime. You're watching Trade Talk. I'm Hiral. A very good morning to all the viewers. An interesting day of trade is what we are embarking on, taking into consideration the kind of global cues that have come in. If you see the durable goods and home sales data in the US above estimates, the US consumer confidence at a 17-month high, you have Brent, which has fallen to almost $72, and a clear tech-fueled rally is what we've seen with the Nasdaq up in trade, Dow Jones ending with gains of almost 200 points, and you have China's industrial profits, though, which are down around 18%. So lots to watch out for, and clearly that's indicated on the SGX Nifty as well. But let's quickly look at the key events in trade today. Firstly, you have FLO expiry, on the back of which the volatility is expected to remain high. Secondly, of the Infosys ASGM, so lots to watch out for in terms of the IT pack. BPCL will be considering a rights issue, and you have the SEBI board meeting as well. But apart from this, last but not the least, the big announcement that we heard yesterday on the street, and which the street was watching out for as well, is the HDFC Twins merger. In fact, we will see the largest private sector lender, which is HDFC Bank, absorbing its parent, which is HDFC. As we know that the merger will be effective from the 1st of July, and the board has said that on the 30th of June, boards of both HDFC and HDFC Bank will be meeting. Lots more other details coming in on our way on that front, but the expectation is that the newly issued HDFC Bank shares will be listed by the 17th of July. In fact, let's understand more on this in terms of what it means for both these companies, what it means for the investors as well from here on. Joining us on the show today, we have Amit Khurana, who's the head equities at Dolat Capital, and Sneha Poddar, Assistant Vice President, Research Analyst at Motilal Oswal. Good morning and welcome to the show, Amit and Sneha.
Thank you.
Amit,
Thank you. Good morning.
always a pleasure to have you. Amit, my first question coming to you is, this announcement was something that the markets were actually awaiting from quite some time. The only thing that was that everyone was looking forward to was the dates. Now that the dates have been announced, how is the street looking at it?
Well, it's a pretty long wait. I mean, it's a culmination of a 16-month exercise, and obviously, given the size of the entities merging and the importance that it has from a systemic level, I mean, for the banking and the non-banking space, obviously there was a considerable amount of effort done by both the management as well as the regulators, and the investors were waiting with the bated breath as to what the likely milestones that we will hit over a period of time. So here it is, and we finally have clarity on how the final step towards formally merging the two entities will play out and create a pretty large entity, second only to State Bank of India.
Right. Sneha, coming to you as well, if you have to look at the merged entity from here on, I'm sure the work with regards to number crunching is going to increase for you as well from now to line up to the merger. But clearly, how are you looking at it, in terms of what will it mean for the investors from a merged entity perspective?
See, from the merge entity perspective, the overall size would become it would be very large. If you look at their overall, the balance sheet size, that would probably increase to roughly around 20 trillion, which is like really huge. Now, if you talk about the the benefits that would come to the investors, the merged entity has a lot to gain from here because there are a lot of synergies. Both the even though HDFC Limited and HDFC Bank both would be benefiting from each other. HDFC Bank would benefit in terms of cross selling, while HDFC Limited would actually take advantage of HDFC Bank branches to further expand its business. So there are a lot of synergy, and overall post merger, there are a lot of hopes that the overall there wouldn't be much impact on the profitability front. In fact, the things would improve from here on for both the entities.
Right. From a market perspective, Amit, coming to you, overall, if you see, one of the key question that comes in from investors is what happens if I have less than 25 shares of HDFC. How do you see that functioning? Are you seeing a fractional share kind of a thing coming in at this point in time?
Well, yeah, I mean that's a question which I guess is in the minds of a lot of smaller investors and individual investors, so to say. We do not have clarity as yet, but my sense is that given by the precedents previously, the practice was that the company would determine a price which would be credited to the smaller investors if it was a question of fractional shares. That was the practice earlier, and I do not have any reason to believe that this will not be the case here. But we do not have a formal sort of clarity as of now on this. So we'll wait and see.
In fact, Sneha, coming to you on the same question as well, anything that you are working on at the back of your, envelope calculation as to how this entire scenario will pan out for investors?
So yeah, as a in terms of number of shares, as we all know, against 25 shares of HDFC, the HDFC Bank 42 shares would be given, and most probably it would be given in a proportionate basis. So even if the investor is having less number of shares, we are expecting that probably in similar proportion would be the ratio would be applied, and similar number of shares would be given to the investor. So I mean, the small investors shouldn't get disappointed at this stage so far.
Right. So that's with regards to, what will happen with regards to someone who has, shares less than 25 in terms of HDFC. The next key question, Amit, that the market is watching out for is who will actually replace a HDFC on Nifty 50? A lot of names that have been floating around as well. What's your sense and what do you pick up?
Well, there are a lot of names floating around with all the justifications that you can build in, whether it is an IT company which is being talked about pretty actively. There is also talk of insurance as a component getting a possibility of increase. So there are a lot of eligible candidates, so to say, but which one will be put in actually by the exchanges, I think remains to be seen. But as of now, based on the street talk, it seems like L&T Mindtree, the merged entity, may be probably the front runner, but this is purely the street talk. This is not our official view. Let me clarify that.
Because the key question that comes into my mind over here is, in terms of the weightage that the BFSI segment has, how will that change post the merged entity in terms of Nifty? That's number one. And if they have to replace it, will it be of a similar value? Will BFSI still continue to hold the similar weightage, or will that also have a tweak on that end? But that's going to be an interesting one to watch out for. Moving from there on, Sneha, coming to you, if you have to look at both these counters, HDFC as well as HDFC Bank, currently, what is your view on both these names and what would you advise investors to do currently?
Okay, we like both the names, and we would advise the investors to hold on to the both the entities. Now, post merger, as I mentioned, that the synergies are tremendous for the merged entity. And if you look at post merger, the chances are that the overall the cost to income ratio would come down to like almost 30%, as the management has guided over next 10 years, while gradually though the return ratios, that is ROE, that would probably get impacted marginally for over 1 to 2 years, but then gradually it would improve as the operational leverage kicks in. So there are a huge potential for both the companies. Together they can tap each other's clients and grow multifold. So definitely a hold for the merged entity.
Right. Amit, what would your view be overall from a valuation perspective if you have to look at the merged entity? And secondly, post the merged entity, do you see good headroom for the FIs also to start coming in?
Well, yes. So our sense is that FY24, the good part of it will go into the execution of the integration. There will be a lot of issues that they will face, and we believe that they are pretty cognizant of that. So I will probably wait and watch for FY24 as to how the integration goes through, how the synergies are essentially put in place. And FY25, I think, is the year when we are really betting on these all positives to play out. Coincidentally, you also have to look at it Most of the other banks, we believe, will top out on NIMs by that time, and HDFC as a merged entity could actually stand to benefit significantly as the synergies start kicking in and the HDFC Limited book starts helping them on the overall NIM management. So from that perspective, HDFC Bank merged FY25 could be the one to watch out for, and that has been our call to the Insti clients. And therefore, we remain buyers on dips for the stock. That's one of our top picks for quite some time, and that retains. And as we go along, we'll probably get more corroboration of this entire hypothesis that we've been managing.
Right. In fact, that's an interesting one. And my last question, Amit, coming to you as well is there any arbitration opportunity that you're seeing? I'm sure, I mean, almost if you take the same lot size of 25 of HDFC versus a 42 of HDFC Bank, it's an investment of around 68, 69,000 rupees. Now, it's a 1% arbitrage. Do you think that's something which the market takes it lucratively?
Well, 1% is too less, and you have a very limited time frame now. So I don't think I will worry too much about the arbitrage at this stage. There may be some of the funds which may want to look at it, but I think that largely that has also played out over the last few weeks. So I'm not really focused on that. I think the bigger focus is as to how the integration works out, the synergies show up, and the entire exercise becomes a positive for the sector view and for the entities at large.
Thank you, Amit, so much for joining us on the show and sharing your views as well. So that's overall in terms of the HDFC twins. But we still have Sneha with us. Sneha, one last question I want to take with you with regards to the BFSI spaces. Now with HDFC actually moving out, right? What will change, and in terms of the NBFC space as well? What's your view on that?
Well, see, with HDFC moving out now in NBFC space, Bajaj Finance would be one large behemoth. And apart from that, there are few really good mid caps which has a potential to actually, become big. Like for one example would be Chola Investment and Finance, which really has a potential to emerge as a really large player. So definitely, yeah, there's a lot of scope which would a lot of potential which would open up for the mid-sized companies to grab the vacuum that would be created because of HDFC Limited getting merged.
Right. So again, the smaller names from the NBFC space will start getting the attention as well. Thank you, Sneha, so much for joining us on the show and sharing those views overall. So that's with regards to the big banking merger, the big merger that we're talking. The HDFC twins overall, clearly the dates have been announced. 17th is what we are looking at in terms of the merged entity shares that will be trading on the bourses as well. But staying with the banking space, it's the big banking upgrade, and this is of the India's big three. SBI, HDFC Bank, as well as ICICI. Now, what this means in terms of the markets, borrowings, etc., is what we need to see, because S&P has gone ahead and given out an upgrade on this. My colleague Vishwanath joins in with more. Vishy, good morning and welcome.
Good morning, Hiral.
Vishy, what would this actually... Yes, go ahead.
Please continue.
No, my question was, overall, what would this mean? Because the timing that the upgrade has come in is also very interesting, right?
Yeah. So the timing is definitely interesting, and a lot of it is emanating from FY23 numbers, and FY23 has been a very, very profitable year as far as the banking industry is concerned. Specifically on State Bank of India, that is the one big upgrade that S&P Global has done. It has raised the standalone credit profile of SBI to a triple B from the previous triple B minus. Now, this is happening after a gap of about 10 years. Back in 2012, S&P Global had downgraded State Bank of India's standalone credit profile to triple B minus, and this was done because at the time the asset quality position of the bank was not so great. In fact, the entire industry was sort of reeling under NPA issues. But since then, things have improved greatly. What S&P Global is estimating in its upgrade is that the ROA, the return on assets for State Bank of India is likely to be about 0.9 to 1% over the next 2 years. In fact, even the risk-adjusted capital position will be about 5% over the next 12 to 24 months. That's something that S&P Global is estimating for State Bank of India. Apart from this, of course, ICICI Bank and HDFC Bank, which also have similar sort of benefits from the system improving, they've also received that standalone credit profile upgrade. The issuer credit rating, which is what matters when it comes to bond issuances and borrowing in the foreign market, now that has been retained to where it was at BBB minus. That is because it is capped by India's sovereign credit rating. India's sovereign credit rating by S&P Global stands at BBB minus, which is literally the base level of investment grade securities or sovereign. And that is why the issuer credit rating does not change for these three lenders. It has changed for some of the others, like Bajaj Finance and Union Bank have seen certain small upgrades, but everything will remain under that BBB minus sort of rating. Your point about foreign borrowing, well, these factors do come in when issuers go to the market and foreign investors look at these opportunities. They do look at the possibility of the institution's own strength alongside where the sovereign is, and only after that do they sort of commit to money at a certain rate. Now, SBI as well as HDFC and ICICI, everybody has been already raising money at very, very fine rates. In fact, State Bank of India probably gets the money at the best possible rate for any Indian issuer. So that has already been continuing. With this upgrade, it is likely to continue to a bit longer. Already, the government has pitched for a sovereign rating upgrade to Moody's. It will likely look at if in case Moody's looks at a possible sovereign upgrade, then you may see some of the other rating agencies come in. We don't know anything about whether any such upgrade is going to happen, but there's a pitch for it for sure.
Right. I think lots to watch out for, Vishy, for the banking space as well. And clearly, as you were mentioning as well, SBI has actually moved past the Indian sovereign rating for the first time as well. So that's an interesting factor to watch out for clearly. But overall, it's the PSU as well as the private banking space that will be in focus in today's session, and whether the bank index is going to be the catalyst to help Nifty achieve new heights in today's session, taking F&O expiry into consideration, is something we need to wait and watch. But apart from this, a lot of other stocks that have been in focus as well. In fact, Rishi is joining us to give us more details. Rishi, we have the insurance company that has continued to remain in focus. What's it that you have?
So again, a couple of more news regarding the BFSI sector. So firstly, HDFC again, it has purchased 15 million shares of HDFC Life Insurance for 992.6 crore rupees on Tuesday through a bulk deal. So HDFC owned 48.65% in HDFC Life Insurance as on March 2023. So this deal values the HDFC Life at 1.43 lakh crore rupees. SBI's executive committee approved acquiring the entire 20% stake that SBI Capital held in SBI pension funds. Now, and another update regarding HAL's board meeting that was held yesterday. So HAL's board, subject to its shareholders' approval, it has recommended a stock split in the ratio of 1:2. This means that an equity share with a face value of rupees 10 will be split into 2 equity shares with face value of rupees 5 each. And the record date for this has been set for 29th September. The board has also recommended a dividend of 15 rupees. So we need to look out for HAL. Now, Titagarh Rail Systems has been in the news recently for the multiple orders that it won, especially the recent Vande Bharat order that it won. It has won yet another order worth 857 crore rupees for 72 standard gauge cars from the Gujarat Metro Corporation for the Surat's metro project. Now, the execution for this would start 76 weeks after the signing of the contract, and it will take another 132 weeks for Titagarh to complete the entire order. Now, the US FDA has issued an observation after it inspected Gland Pharma's facility in Hyderabad. Now, this observation is a procedural one, and the company has said that it will submit to any preventive actions for this to the US FDA.
Right. So lots of sectors that will be in focus in terms of stock-specific action. Thank you, Rishi, for getting us all the details here. But moving on, the IT pack continues to remain in focus. As we mentioned, you did see NASDAQ also scale some good moves in last night's session, and probably there could be a reflection coming in our markets as well. The key thing that we are noting over here is that Tata Technologies IPO, but the SEBI has approved the first public issue from the Tatas in 20 years. Now, what would this actually mean for peers like a KPIT Technologies? We have Tushar Deep Singh who joins us with more details on it. Tushar, you've been tracking this space pretty closely. I mean, first one in 20 years, and how big a competition do you think this is going to be to the peers?
Oh, it's very interesting now. KPIT, since the demerger with Birlasoft about 3 years ago in 2019, has been, at least in the Indian space, the clear market leader in the auto tech industry. Now, with Tata Technologies coming in, it has competition. Competition just not for market leadership, but also the investor mindshare. Now, investors have one more auto tech company, all that also from the house of Tata to contend with. The IPO will see a 20% stake sale by Tata Motors with 95 million shares on offer, which in a pure offer for sale. While we don't know the valuation as of now, as per the last buyback of Tata Technologies, the valuation is around 16,000 crores. So going by that calculation, the IPO size could be near about rupees 4,000 crore. Coming back to KPIT, KPIT counts Renault and Honda, both the deals signed in the last 1 year. Tata Technologies has, of course, Tata Motors, JLR, and Airbus as in its client list. So the competition is stiff. What sets them apart is KPIT is more towards the services side of the business, which means it can deliver the software that is required in a particular car. Tata Technologies is on both ends. It also is involved in the IP side, the intellectual property side, the R&D side, as well as the delivery side. So it has a more cohesive or more cohesive or more end-to-end suite it can provide. So we asked KPIT about the competition, incoming competition from Tata Technologies, and they said that the competition is welcome. But once this goes on the floors, we'll see what happens. Another point to note here is that in April, about 2 weeks after the Tata Technologies IPO was announced, JP Morgan downgraded the KPIT stock given the competition that may come from technologies. So it will be an interesting time in this space. What do you hear?
Tushar, I mean, it is absolutely an interesting time. In fact, you have signed DLM as well, where the IPO has been subscribed around 2.65 times on day one. So let's see how the day progresses there on day two. And if you see in terms of the other one, in terms of the IPO as well, you have Idea Forge, where the IPO has been subscribed 13.27 times, and this is on day two. One more day to go in terms of Idea Forge, so it's going to be interesting in terms of where primary markets are concerned. But very lastly, a quick view in terms of how the markets are expected to open as well in trade. Clearly, if you go to see a range-bound trade is what we have been witnessing over the last couple of trading sessions. But from here on, being expiry, the anticipation is that we could see some good up move that could be coming in, because we did see a good recovery in the last hour of trade yesterday. Apart from that, if you see in terms of the short covering that we saw ahead of the FNO expiry, that is expected to continue because that's caused a sharp rebound as well. We've zoomed past the 18,800 levels, but clearly SGX Nifty and the global markets are indicating that a further upside that could be on the cards as well. HDFC Twins have acted as a clear catalyst in the upside in yesterday's session. Overall, if Nifty moves up, the key resistance that we will be watching out for will be 18,860. And for Bank Nifty, the support is coming in at 43,812, followed by a key resistance at around 44,313. So these are key levels we will be watching out for. But clearly, the consecutive long build-up that has been observed in the F&O market, that is clearly indicating that there is some potential upside coming in there. The FPI long-short ratio has stayed above the 50% mark for a 10th consecutive session. And overall, if you see, the cues are giving you some signs of positivity for today's session. And as we know, it is a truncated week as well. So you could see a lot of volatility that could continue in terms of markets today. In fact, that's all that we have on this session on Trade Talks. Lots more lined up. We're just around 15 minutes away from markets opening, and that will give you cues as to what direction we are headed in for. Thanks for watching.